Well, hey, you guys. So listen, even if you don't consider yourself to be super financially savvy, chances are you have a general understanding of what it means to save and invest. But I'll be the first to say that there's definitely some nuances that can make things a little bit complicated. So today, I want to talk to you about where not to keep your savings, and not to be dramatic. But if you're missing out on this opportunity, you could be missing out on earning thousands of dollars worth of just passive income just by knowing which type of savings accounts are best when it comes to your money. And spoiler alert, it's not always a traditional bank. So stick around because you'll hear my advice on this and how it has shifted over the past couple of years. But before we get too far into the weeds, here is the basic high-level reminder on when and how much you should be saving for. So your first savings goal is going to be a $1,000 emergency fund. And then once you're completely out of debt, then you're going to get a fully funded emergency fund of 3 to 6 months of expenses. And so once you've accomplished that, that's baby step 3 in our baby steps, then you're ready to store more savings in a really smart, safe place, and then shift your focus from the emergency fund to investing 15% of your income into retirement. Now, this doesn't mean that saving completely stops, but once you have 3 to 6 months of expenses tucked away, then you're in a good spot to save a little bit less and invest more. But saving and investing aren't totally unrelated, which brings me to the main point of what I want to talk about today: high-yield savings accounts. So if you're not familiar with a high-yield savings account, it's a type of savings account offered by banks and credit unions with a higher interest rate than traditional savings accounts. So instead of letting your emergency fund sit in a regular savings account with almost a non-existent interest rate, you can choose to store it in a different place that will slowly and securely grow your cash over time. And remember, when you owe money to the bank for something, like a mortgage or car loan, interest feels like an enemy, right? It's extra that you have to pay on. But when you flip the script and you're the one that actually gives your money to the bank, then you actually earn interest, which is a really beautiful thing. So, for example, when you look at a traditional savings account, it might offer you an interest rate of 0.5 or even 0.25%. So it is not great. I mean, I guess it's better than zero, but it's basically can feel like zero. But a high-yield savings account will usually offer you around 4 to 5% these days, which is a huge difference. But not all banks offer high-yield savings accounts. So here's how I would go about getting your money to the right place if your current bank doesn't have a high-yield savings option. Number 1, look to see if you can find one with no minimum initial deposit, no minimum balance to maintain, and no penalties for withdrawing your money. Number 2, look out for transfer times and withdrawal limits, because transfer times means how long it's going to take you to access your money if you need it. So if you have an emergency, you want to be able to withdraw that money pretty immediately instead of waiting for like 5 business days to get your funds transferred, which sometimes that can happen. And with a withdrawal limit, it can control how many times you take the money out over a period of time. So for example, some accounts only allow you to take money out 6 times a month. But if you're using it as an emergency fund, that shouldn't be an issue because hopefully you don't have 6 emergencies in 1 month. Number 3, make sure your high-yield savings account is through a bank that's FDIC insured, or if it's a credit union, NCUA insured. So this means your money's protected up to $250,000 per depositor, per bank, per account ownership category. And also this bank may be online too, you guys. That's where our high-yield savings account is. It's through Ally Bank. It's not sponsored, but online banks are great options, so always remember that too. What's really important there, again, if the FDIC insurance, that's a question we get a lot, because usually money market accounts versus high-yield savings, this can differ on what's insured and what's not. But I think also the reality is if it gets to that point that the bank goes completely under, then we're in a 2008 type economy, which everything's gonna be crazy then. But this also brings me to what I mentioned earlier, and my advice on this has shifted over the past couple of years because, as always, these principles, they stay the same that we talk about here at Ramsey. I mean, they've been pretty much the same for 30 years. And so money market accounts was the thing that I usually push people towards when it came to their emergency funds or having some savings. And money market accounts are still great. But high-yield savings accounts, they've really just upped their game over time. And usually money market accounts, again, they can have some things that you're like, oh man, that can be tough to get around, where high-yield savings accounts, are usually more flexible over time. And depending on the account, it's easier to find one with a higher interest rate on a high yield versus a money market. But both are great savings options. They're very, very similar. Really, the main benefit of a money market account is that they're easier to access, because if you need your money out, you can get it. You're gonna be able to have a checkbook or a debit card with it. You can get your money out really fast, which is really helpful. Where a high yield savings account, you have to transfer it. And again, it could take a business day, some up to 5 business days. So just be aware of that. Now, if you're trying to decide between the two, ask yourself this question: how often do I need my money? Because if you're really using this as an emergency fund, or maybe you're using this as a savings account that you're gonna spend, in 3 years, then a high yield savings account might be your best option. But if you're in a season that you're needing to take more money out more frequently, a money market account might be better for you. And the best way to find margin in your budgets for building up savings really is sticking to a budget, you guys, because some of you may be thinking, oh my gosh, this sounds great, but I need savings. Well, one of the things to do is to know where your money's going. And so budgeting is so key for this. If you've not used our EveryDollar app or gone to everydollar.com, do this, you guys. You can create a budget completely free. And this is where you're able to track your expenses, you're able to see where your money's going, and you can actually have a plan and have goals around your money. And if you're ready to level up your interest earning game, then make sure to check out my episode on investing for beginners, where I give you a full overview of this. So, guys, good luck saving. And always remember to take control of your money and create a life you love.